Welcome to Talk Tickers. We cut through the noise of earnings calls to deliver the insights that really matter.
Yeah, getting straight to the point.
Exactly. Today, we're diving into the Smith Micro first quarter 2025 earnings call. And, well, the headline seems to be a company in transition.
That sums it up pretty well. The latest numbers show revenue came in at $4.6 million.
Okay.
Which is a 20% drop compared to this time last year and down about 7% from just the last quarter.
Oof. And the core business, family safety.
Yeah, that saw a dip to $3.8 million, down about 15% year over year, mostly because of that expected decline in the old Sprint Safe and Found revenue.
Right.
But interestingly, it was pretty much flat compared to Q4.
So holding steady quarter over quarter at least. What about the other segments?
Well, CompSuite had a bit of a bright spot, actually, around $700,000. That's up $100,000 from Q1 last year.
Okay.
Though it did decrease quite a bit from Q4, about $400,000, but that was due to some favorable revenue adjustment they had back then.
Gotcha. And ViewSpot?
ViewSpot took a big hit, only $100,000, down about $600,000 from last year, mainly because a contract ended. It was up just a tiny bit from Q4.
Right. So a mixed bag, but mostly down year over year. What are they guiding for next quarter, Q2?
They're expecting consolidated revenue somewhere between $4.4 million and $4.8 million. So pretty similar range.
Okay. So the top line has definitely seen better days, but digging a bit deeper, the profitability picture seems a little more nuanced, right? You mentioned the gross margin actually jumped.
Yeah, that's a really crucial point to unpack. Gross profit was $3.4 million, which is down from $3.8 million last year, obviously tied to the lower revenue.
Makes sense.
But the margin percentage, that improved quite a bit. It hit 73%, up from 66% in Q1 2024.
Wow, that's a significant jump. What does that usually signal?
Well, it often suggests a shift in focus, maybe towards higher margin software or services, or, maybe they're just getting better at managing production costs. But yeah, while the percentage looks good, the actual gross profit dollars were still down because, well, they sold less stuff. They do expect to keep that margin strong in Q2, though, somewhere between 72% and 75%.
Okay. And what about how they're managing their expenses? That seemed to have a big impact on the bottom line.
Absolutely. So GAAP operating expenses, huge decrease, $8.6 million this quarter, down a massive $26.7 million, or 76% year over year.
76%. But wait, wasn't there a catch there?
Yes, exactly. A big chunk of that drop was because last year they had this large goodwill impairment charge, basically writing down the value of an asset.
Ah, right, the one-off charge. So non-GAAP gives us a better sense of the ongoing costs.
Precisely. And non-GAAP operating expenses were $6.1 million. Still down significantly, about $2 million or 24% compared to Q1 last year. So that shows real cost cutting.
Okay, so they are tightening the belt.
Definitely. Although it's worth noting those non-GAAP expenses did tick up slightly, about 5% from Q4 2024.
Any reason given for that?
Not explicitly detailed, but likely related to investments in the new initiatives we'll probably get into. They are forecasting a slight decrease again for Q2, maybe 1% to 4% lower than Q1.
So even with the revenue dip, these cost reductions really help them cut down their losses.
Exactly right. The GAAP net loss improved dramatically. Went from a $31 million loss last year, or 3.28 cents per share, to a $5.2 million loss, or 28 cents per share this quarter.
Big improvement.
And the non-GAAP net loss, same story. Shrank from $4.2 million, or 45 cents per share, down to $2.9 million, or 16 cents per share.
So still in the red, but, moving in a much better direction.
Definitely. The trend is positive on the loss front. They ended the quarter with $2.3 million in cash and equivalents.
Okay. Not a huge cushion.
No, it's not. But they also just filed a new shelf registration. It replaces an expiring one, basically gives them the option to raise up to $75 million in capital down the line if they need it, gives them flexibility.
Right, keeps options open. Now, this is where the conversation on the earnings call really seemed to pivot, didn't it? Management kept highlighting these new initiatives, SafePath OS for kids and seniors, and the SafePath Kids rate plan thing.
Yeah, the strategic direction is unmistakable now. They're pouring resources into these new, more comprehensive offerings, and they're talking a lot with mobile operators about them.
What's the core message they're trying to send the carriers?
It's pretty direct. Their pitch is, look, these solutions help your core business. Selling devices, selling rate plans, adding subscribers. That's what carriers care about.
So aligning their products directly with the operator's main goals.
Exactly. By doing that, they're aiming for deeper, more strategic kind of long-term partnerships. And talking to more people within these big carrier organizations could open up bigger opportunities later.
They sounded pretty optimistic about actually closing deals for these new products soon. Was that just, typical management rah-rah, or did it feel like there was substance there?
Well, you always take guidance as a grain of salt, right?
Right.
And selling to major mobile operators is notoriously slow and complex. So many layers, integration challenges.
Yeah, it takes time.
It does. But the management team genuinely sounded encouraged by the reception so far. They kept pointing to what they see as strong global demand for digital family safety stuff. And they believe their kind of expanded product set is hitting the right notes.
And they mentioned expanding existing deals, too.
Yeah, the fact that they're already talking about expanding agreements for these new offerings with current partners suggests those relationships are also, gaining traction.
Okay. And then they really got into SafePath 8, the next-gen platform. And AI sounds like it's absolutely central to it.
Oh, completely. And what's interesting is how they framed their AI strategy. They built it around 3 pillars: safety, carrier-grade reliability, and providing insightful features.
Not just AI for AI's sake.
Right. They seem to have specific practical uses in mind. And they pointed out they already use AI in CommSuite, for voicemail to text and scam call detection, and in SafePath Drive for spotting unsafe driving.
Okay, so they have some history here. What are some of the new concrete AI features we can expect in SafePath 8 then?
Well, a big one is social media intelligence. The idea is to notify parents about potential concerns. Think cyberbullying, hate speech, profanity, maybe even signs of self-harm based on their kids' online interactions.
That's sensitive territory. How are they handling privacy?
They made a point of saying notifications would be triggered by specific areas of concern, not just blanket monitoring of everything. Finding that balance is key, obviously.
Yeah. What else?
They're also building a dynamic sort of age-aware platform. It'll automatically suggest safety settings based on the child's age, but parents can always override and customize them.
That makes sense. Less guesswork for parents.
Yeah. And another interesting one, SafePath 8 will apparently be able to block kids from using specific AI chatbots and tools. You can see how that might be relevant for homework or just unsupervised AI use.
Oh, interesting, like blocking ChatGPT during homework time.
Potentially, yeah. And maybe the most ambitious part is this family AI assistant. It sounds like it will use large language models to give parents actual insights from the SafePath platform, all based on those core principles: safety, reliability, insight.
That family AI assistant. Yeah, that sounds like it could be a real differentiator if they pull it off. And it seems they're also thinking beyond just the tech itself, looking at digital wellness more broadly.
Exactly. They mentioned plans for a digital wellness resource website. They want to curate good online info for families and hope to expand it through partnerships. It shows they're thinking about the whole picture.
And the feedback from carriers on all this new stuff.
According to management, the conversations with both current and potential customers about these latest solutions and the long-term strategy have shifted quite positively. They really believe this expanded portfolio is the key driver.
Okay, they also gave some specific updates on partnerships. What stood out there? Any key progress points?
Yeah, quite a few updates. The Orange Spain partnership, using SafePath Kids for that unique 2-year rate plan they have, that seems to be going well. They're planning new initiatives for the back-to-school season.
Good timing.
And they're talking to other Orange groups in Europe, too, building on that Spanish launch. Plus, after Mobile World Congress, they apparently got interest from other European operators, leading to some new trials.
Okay, some momentum in Europe. What about the U.S.?
In the U.S., they're working with AT&T on new marketing stuff linked to product updates, hoping to get AT&T Secure Family in front of more people. And discussions are apparently ongoing with AT&T about expanding the SafePath platform further.
And Boost, T-Mobile.
Yeah, progress with Boost too. Marketing for visual voicemail and Boost Family Guard, plus talks about bundling opportunities and bringing in broader SafePath solutions. And they said the T-Mobile partnership is broadening, with ongoing talks about expanded SafePath offerings there as well.
So deepening relationships with existing partners, but you mentioned new operators showing interest too, especially in SafePath OS.
Yeah, and that's potentially really significant, right? Getting interest from operators they don't currently work with suggests the new strategy might be opening totally new doors.
Specifically for SafePath OS.
Yes, for both the kids and the senior versions of SafePath OS.
Yeah.
And also that kids rate plan concept. They said the features coming in SafePath 8, especially the AI stuff, have only increased that interest from potential new partners.
And the senior version has a timeline.
They're expecting it to be available this fall, which, could line up nicely with the holiday selling season if a carrier decides to launch it then.
Interesting timing. And SafePath 8 itself, is that going to be a premium offering?
Yes, they explicitly said it will be offered as a premium product at a premium price. So the expectation is that should help overall revenues once it rolls out and gets adopted.
Okay, so putting it all together then, what's the big picture for someone looking at Smith Micro right now? What are the key takeaways for context?
Well, first, you have to accept the current revenue decline for what it is. It reflects that planned pullback from legacy stuff, while these new strategic areas are still ramping up. They're not quite replacing the old revenue yet.
Right, it's a transition period.
Exactly. Second, the improved gross margin is a definite positive. Hints at better pricing or cost management, maybe both. Third, the big drop in operating expenses, especially that non-GAAP number, really shows cost discipline as a focus.
Even though they're still losing money.
Right, which is the fourth point. The reduced net losses, both GAAP and non-GAAP, show clear progress towards profitability, even if they aren't there yet. And finally, that new shelf registration just gives them financial runway and flexibility.
And this heavy focus on innovation, the AI and SafePath 8, plus the positive signals from carriers, those are pretty critical factors too, aren't they?
Absolutely crucial. Their commitment to pushing the platform forward with AI shows they're not standing still. And the fact that carriers, both current and potentially new ones, seem increasingly receptive to these new offerings that suggest their bet might be paying off in a market, family safety, that's likely pretty resilient. Parents are always concerned about this stuff.
Makes sense. All right, let's shift gears to our This Is Not Financial Advice segment. Time for a speculative, maybe a little out there, but plausible trade idea based on all this. What have you got?
Okay, so thinking about that strong carrier interest in SafePath OS for seniors and the potential launch around the holidays, here's a different kind of angle. Instead of just a straight bet on Smith Micro stock, consider the possibility of a strategic partnership, or maybe even an acquisition driven by a major player in, say, healthcare tech or assisted living technology.
Interesting. Like a company already serving seniors.
Exactly. Imagine a big company focused on tech and services for seniors. They might see Smith Micro's platform, especially the senior OS version, as a way to integrate a ready-made, carrier-friendly safety and communication suite directly into their offerings.
So it gives Smith Micro instant distribution, and the other company gets a proven platform.
That's the idea. It could massively accelerate adoption for Smith Micro. Now, obviously, this is pure speculation. Highly speculative, carries huge risk given Smith Micro's current financials.
Of course, purely hypothetical.
Purely. But you look at the demographic trends, the growing need for senior safety and connectivity. It could make Smith Micro an attractive piece for a larger company wanting a carrier-grade solution in that space. It's a thematic play on the senior tech trend, using Smith Micro as a potential component.
That is a fascinating angle to consider, definitely outside the box. Okay, that wraps up our deep dive into the Smith Micro first quarter 2025 earnings call.
We hit the financials, the big strategic shift to SafePath and AI, the carrier dynamics, and that speculative idea.
We did indeed. And as always, please remember to do your own thorough research before making any investment decisions. This is just our take on the call. So what are your key takeaways from Smith Micro's latest report and strategy? We'd love to hear your thoughts.